Hi, this is the second video on the examiner's report for F7 financial reporting that was sat in June 2013. We've already looked just at the general examiner's comments on this paper, and we also took a quick look then at question 1 and what issues there were surrounding that question. We're now moving on to question 2, which was a question that the examiner said was dealt with quite well along with question 1 within this exam. However, that's saying, there still were issues that the student could address and probably just try and focus in a bit more, and that would gain them some extra marks and help them pass this exam more easily. So this question, you were asked to prepare 3 different things for part A. So there was the statement of profit and loss, statement of changes in equity, and then the statement of financial position. So there's 3 different elements. That can be quite a daunting thing if you're thinking of your time management, but the thing is just try and allocate your time between the three different sections that you've been asked to prepare, and also take a note of the marks that are allocated to them. So there's different marks that are allocated towards the P&L, the changes in equity, and then the statement of financial position. So they're saying that it was a traditional preparation of financial accounts from a trial balance, and this was combined then with several different adjustments. The adjustments that appeared in this question were the sale and repurchase of goods, which is in essence a loan. So being able to quickly pick out this distinction and this element would have been key then to this adjustment. The second is the non-current asset that was held for sale, the revaluation of property at the start of the year and the various adjustments that are needed for that, and then also the rights issue of shares, and then also usual adjustments for taxation. The thing that seemed to be hitting quite a lot of students within this question was just whenever they were making the adjustment was to ensure that where there was changes then to the P&L and the statement of financial position, that they were both adjusted for, and that you weren't just concentrating on one adjustment within one element of the financial statements that you had been asked to prepare. Part B then was part of the question that the examiner was saying in his introduction that a lot of candidates didn't even attempt to ask. Now this is a calculation of basic earnings per share, and realistically if you knew the calculation, the formula for this, you should have been able to have a really good attempt, a really good stab at this. So it was quite surprising that a lot of people were throwing away these easy marks, even though it was only 3 marks for this question. Throwing them away does not help your cause of trying to gain 50%. So the examiner's saying that it was a generally well answered question, and that the first part, the preparation of the financial statements themselves was well done by candidates, and realistically, this should be the case, because you should be able to learn just the pro forma of the P&L, the changes in equity, and then the statement of financial position, and just then be able to adjust them slightly for all those adjustments that you've been asked to do within the question. So the statement of the profit and loss, they're saying that a lot of people did pick up on the fact that in essence the sale and repurchase was a loan, that they were saying that the issue came then whenever they were adjusting, so they maybe were just making one adjustment rather than all the adjustments. So the loan then was deducted from the revenue, but then the adjustment to the cost of sales or the closing inventory was not done, so they were skipping out certain steps. So whenever you're making an adjustment, no matter what it's for, try and ensure that you think of all the impacts that it can possibly have, so that the loan is basically going to affect your profit and loss, and then also your balance sheet then. So try and think of how it's going to be adjusting and what effects it's having on the statements as a whole. The calculation of depreciation for the property due to the revaluation. Now this is something that crops up time and time again in F7, and realistically there really shouldn't be any errors whenever you're calculating such things as depreciation, because you know that this is going to come up, so this should be well learnt. The tax charge. Now tax is something that again crops up time and time again, and in order to answer these questions correctly, you need to have a good understanding as to the reasons, why you adjust for them within the financial statements. So, adjusting the prior year balance the wrong way, that's quite a fundamental error that really shouldn't be happening at this stage. The statement in changes of equity. This was generally well prepared, the examiner's saying here, which to be honest with you, I'm surprised at, because whenever I was studying for the ACCA exams, I really didn't like preparing the changes in equity, just because I was more familiar with the income statement and also the statements of financial position. But there were still, there was a few issues within this. Many candidates did not seem to understand that equity dividends paid are not an expense, but a deduction from retained earnings. So this is something that's just showing a bit of a lack of understanding as to the reasons why things are done within the accounts and the actual effect that these adjustments have on the accounts. Statement of financial position, generally well prepared. Again, this isn't surprising because you have the format already, basically in your head before you go into the exam. So this should just be basically plugging in the various different adjustments and trying to get the figures to balance within it. Although if you get your balance sheet to balance within an exam, you're doing very well, because a lot of people go through their entire exams without getting the balance sheet to balance. But if this does happen, just put in a balance and adjustment to show the examiner that you know that it should balance, but just you haven't got there. So question 2b, the one that the examiner was saying a lot of people skipped out. It's surprising that people did skip this out because, it is a simple calculation that you need to do. And if you know the formula, you should have been able to have a good stab at this. And also, he's saying that this earnings per share calculation, there was a similar one in June 2012. And that just really highlights the importance of doing past paper questions, because time and time again you'll find that something that they've asked maybe a year or two before does crop up again, and you'll be kicking yourself if you think, I remember seeing this, but I didn't actually learn what to do or how to deal with it. However, it is a positive note that the examiner is ending on. He's saying despite the above errors, this was a high scoring question. So he did mention in his introduction that question 1 and 2 were high scoring. And that can reflect just the fact that people are concentrating on these big preparation of, consolidated statements of financial position, along with just the, preparation of ordinary statements of financial position or P&L or changes in equity. But it also could show just that people at the start of the exam are, full steam ahead, and you have a lot of energy and you're really concentrating, and that the following questions, you're maybe starting to lose a bit of your pace. So again, practicing exams in full before your actual exam day is key to being able to basically stomach the entire 3-hour exam, to try and get your stamina up and get your concentration up for that length of time. So despite the above errors, it was a high scoring question, and that should give you a lot of confidence then going into these type of questions in the future.